Welcome to Make It Change. Today I'm going to walk through showing you how I fill out my budget. This is the spreadsheet that I've used for my budget for the last probably 12 years or longer, and I'll be filling it out with fake example numbers, and you can follow along. I'll show every single cell, and you'll see the formulas in each cell. If you want to create your own budget, obviously pause and restart as you need to. And you'll see that I go from income, you can already tell what's on the screen and some of the information in there, all the way through monthly expenses. And one of the funny things about, working up a budget is before you do it, it feels really, monumental, as though it's a really big task. And it's, hard to get a handle on what all of the numbers are. They feel like there are just too many of them. And the funny part is most of the numbers are ready for us. They're just sitting there, on pieces of paper or in, PDFs, waiting for us to use them. And so, like you can see, a lot of this information is directly from your pay stub, from my pay stub, from someone's pay stub. And then working out your monthly expenses, like I had suggested in previous videos, and what I also did when I was first starting was to look at, credit card statements and bank statements, and, just kind of write down on a month by month basis what your income was and what your expenses were, and try to kind of categorize them and figure out what level of detail you want to get into, for your own life and for your budget. Um, so this may be a long video, but I'm going to go through the entire budget and fill everything in, to demonstrate how it works and just what you end up knowing. Um, I like knowing the percentages of things. That just helps me kind of understand the balance between different portions of the budget. So I'll go through and show all of those calculations. All right, so let's see. Let's start filling this out. So let's see. First, I guess I should say, please like and subscribe. That helps the channel grow. And I'm not a financial planner. This is not financial advice. This is my experience and my personal spreadsheet and how I keep my own expenses organized. All right, so I'm just looking over at my notes so that I know what numbers to tap in. So one of the other things you'll notice is that I color code just a little bit the items in the budget. So I use a certain color for mandatory and a certain other color for discretionary. For me, I just made a decision. Anyone can make any other decision and it'll be equally valid for them. But for me, I decided that things like medical, dental, and vision insurance coverage were mandatory, and that ultimately 401k and HSA contributions were discretionary. Now, they're necessary, mandatory for retirement savings and certainly for aiming at financial independence. But at the end of the day, between those five things, they're discretionary. I will be drinking water during the video. Sorry about that. Okay, so let's start filling this out. So basically, what I did, and even what I do now, each year I come in, maybe even twice a year, I come in and I update this budget. Now, I'm not actually updating my expenses. My expenses, I'm very familiar with them and I have a really good handle on them, so they largely stay the same. I'm actually updating my income and then the taxes and what's going into which different bucket because of pay increases that come or whatever else. All right, so let's say that a person makes $5,000 monthly. That's their gross. And you can see that that's just a regular text field. You enter in this number. Obviously, these text fields are nothing special. They just contain words. Here, the yearly is just a simple formula. It's B2 times 12. So you're just getting your yearly gross income. Well, there is no percentage there for that one. All right, so then you would just a person would look on their pay stub, and let's say that you're contributing $500 per month to your 401k. Yep, there we go. Okay, and then let's say that you have high deductible health insurance and you have access to an HSA and you're maximizing that contribution, 250. And then, right, sorry, I'm going to show you each field. So there's nothing too mysterious going on. This is just B5 times 12. So 500 times 12. And it's the same here. It's just B6 times 12, working out your yearly values given your monthly values. That's all that's going on. The percentage I am calculating against the gross because right now that's the only number that you have, and I am calculating against the yearly gross. The percentages would be the same whether you do the monthly or yearly, but just for the order of the columns, it made sense to do it against the yearly value. And so no big mystery here, right? C6 divided by C2. Okay, so then let's say your medical coverage costs, I'll just use some numbers, 70. And so this is just B7 times 12. And then the percentage is just C7 divided by C2 by your yearly gross income. And then here for dental, let's say it's $16 a month or so. Again, that's just times 12 to give you your yearly expense. And then C8, your yearly expense for dental divided by C2, your yearly income, your gross income, your yearly gross income. Okay, so then for your vision coverage, let's say it's something like this. Again, for the yearly, it's just multiplied by 12. And then for the percentage against gross, it's just that cell C9 divided by C2, your yearly gross income. Then just add things together so you can see your before tax total is, these are your deductions. Your before tax deduction total is 848.24. So that's just the sum of cell B5 through B9. That's 401k down through vision. And then the yearly before tax total is just cell B10 times 12. And then the percentage is cell C10 divided by C2 against your gross income. Then again, this is just all from a pay stub. So there's not actually anything that I am figuring out. I'm just actually tapping numbers in from a pay stub. These are fake numbers as an example, but when I'm actually doing this for myself. So then the taxable gross, it's just B2, your gross monthly income, minus B10, your before tax deduction total. And then your yearly is just C2 minus C10. So your yearly gross income minus your before tax deductions, the total of your before tax deductions. Now, I guess it is a little bit funny that I didn't do multiplication here, but I did the subtraction within the column. All right, so then your taxes, of course, coming from a pay stub, I'm just sort of estimating what this might be for someone I do not know. So I would say maybe 700 for federal withholding, and then no mystery. This is for the yearly. It's B15 times 12, just multiplying by 12 to give you the yearly value. And then let me check something. Yes, good. Okay. And then for the percentage, this is where I change the percentage calculation. And you'll see that for me, I changed the percentage calculations as I move down through kind of the different layers of the budget. I don't have column headers to really indicate that. I just know that that's what I do and that's what the numbers represent. Okay, so this is really C15. So the yearly amount of federal withholding divided by C12. That's the yearly taxable gross. That's the percentage that I want to know. I want to, because that's how the taxes are calculated. They're calculated against the taxable gross. So that's the percentage I want to know. I could know the percentage against the yearly gross, but that's not really That's not really useful. That's not what the percent actually is. It's percent of the taxable gross. All right, so then for federal Medicare, that might be 70. And then this is just a times 12 cell. And this is again just division C16 divided by C12 against the yearly taxable gross. Okay, so then for OASDI, maybe it's 280. So this is just multiplying by 12 in this cell. And then again, just C17 divided by C12 so that you know the percent against the yearly taxable gross. Okay. Ah, giving a little bit away here. I happen to live in Maryland. So then, oh, whoops, I reused a number. That's fine. Let's say it's 280. So then this is just multiplying by 12, once again in the yearly column, and then a percent, the cell C18 divided by C12, the percent against the taxable gross. And then for the total, it's very similar to the total above. I'm just doing a sum of cell B15 through B18. So federal withholding through Maryland withholding. And then this is, oh, here I'm doing multiplication. So, okay, interesting. I guess, oh wait, I did multiplication up here as well. I did, okay. So this is just B19 times 12 to get the yearly. And then the percent is just cell C19, the total, divided by C12, the yearly taxable gross. Okay, so then scrolling down. And this is just in Google Sheets, in Google Drive. It's nothing super, complicated. I'm not using Excel, I don't need like a license for that and, all that kind of headache. I'm just using completely free tools to track my budget. Okay, so then maybe, okay, so a person may not be making after-tax 401k contributions, and maybe a person has access to this is a general employee stock purchase program. Some people are offered them through their employers, but this person maybe isn't taking part. Okay, so $0. There's nothing mysterious about these cells. This is just multiplication by 12 to give the yearly. Oops. There we go, to give the yearly. And then division. Now this is against the gross, C2, the value in C2. Let's see if I can freeze these. Let's see. All right, I can't remember how to do that, so we'll move on. All right, so multiplication by 12, and then division against the gross, the C2, for the after-tax deductions. That's usually how that percentage is calculated. If an employer offers these things, they're usually calculated as a percent against the gross income, so that's why I'm doing that here as well. All right, so just moving forward. So then the net income is just a series of subtractions. So it would be, B2, the gross, minus B10, the total for before tax deductions, minus B19, the taxes, minus B24 if there are any after tax totals. And then this is the amount of income, net income, that the person has after all of that activity. And then here you're just multiplying by 12 to get the yearly value for that. And then dividing here, C26 divided by C2. So you're dividing the net annual income by the gross annual income. Okay. So then now we get down to the expenses portion. This covers your income, a person's income. And for me, I'm really just reading down through, a pay stub, and I'm just entering these things in. So like this part of the budget, of course, is very easy. It's all actually calculated for you, and these numbers are available for a person, available for me in a pay stub. Then figuring out living expenses, that is, a little bit, more difficult part to get a handle on. But like I said before in other videos, you would just look through, credit card statements, a few months of credit card statements, and a few months of bank account statements. And, with a pen and paper or with a spreadsheet, whatever suits you, just keep track of what the categories are, figure out what level of categorization will work for you, and then you'll have that information to enter into the budget here. So let's say that a person has 1,050 for rent. So no mystery here for the yearly column. You're doing a multiplication by 12. And then here, you're dividing the annual amount, C29, by the net income. So like I had said, I changed the percentage calculation as I go down. And here now I'm calculating against net. I know a lot of people calculate housing expenses against their gross. I don't like doing that because I don't live on my gross. I live on my net. So that just doesn't make any sense to me. So I calculate against the net. All right. So let's say electric costs. Now, so look, the reality is if a person is paying 1,050 in rent, they're either extremely lucky or, to live alone and extremely lucky, or, they probably have a housemate. Um, uh, So these other costs that I'm going to enter for electric and water, they may actually be cut in half, but I'll just go ahead and use what look like, full values for electric and water. So this might be a little bit bigger than reality would be. So, say $80 for electricity for a month, and then here's multiplication by 12 in the yearly column. And then here is the division of the yearly electricity cost divided by the net income for the year, C26. Okay, so then for water, if a person pays water, um, let's say it's 20 bucks a month. And then here's multiplication by 12. And here's division, C31 divided by C26. So dividing by the annual net income. Okay, then let's say you have home internet service and it's on the expensive side. Um, so then multiplication by 12 in the yearly column and division against the annual net income to know the percent. So then a person probably has a cell phone and this would also be on the expensive side. Okay, so multiplication by 12 and division by the net income, by the annual net income. And then this is what I do. You'll come up with a flavor that works for you. But for me, um, I did an exercise when I was 28 and 29 to really break down exactly what I was spending money on. And this was everything that was, going onto my credit card. And I figured out what categories, within the general category of credit card expense, I was spending things on, and I moved things around. And then I figured out how to live comfortably. And so for me, I don't break it. I don't break anything down lower than my credit card bill because first of all, it gets paid off in full at the end of each month. So never carrying a balance, never paying interest. That's really important, and it can take work to get there, but it's really important to work towards that. And so in my budget, there's just a general number for a credit card, and that is a comfortable number for me to live within, such that if I maybe don't spend so much on this category and then I spend a little bit more on that category, I'm living comfortably, and I always kind of end up around the same number each month. So I don't keep an eagle eye on exactly every single purchase and what's going where, but I am aware if it seems to go a little bit out of line for one category, one way or the other. So uh, let's say that this person, in order to live their life fully for a month, they end up with a $900 credit card bill. So then here's multiplication by 12, and here is division by the annual net income. Okay. So then I do some other things here. I like to know the total living expenses minus rent, and then you can see total living expenses down below that. That includes rent. So total expenses minus rent. You can see that's just a sum of cells B30 through B34, right? So that's electric through credit card. The costs of living your life without rent, minus rent. All right, so then here is just multiplication by 12 to get the annual amount. And then here is just division of that total by the yearly net income. And then total living expenses is just including rent, or if you have a mortgage, anyway, your housing costs. Total living expenses. This is just a sum of B29 through B34, so rent through credit card. And then here is multiplication by 12 in the yearly column, and here is division by the annual net income. So you can just see that clearly. I think it's really useful to know. So then you just do, I do some subtraction in order to know what's available for savings. Okay, so this is B26 minus B38. Okay, B38 are your total living expenses, including housing. And then B26 should be, yes, the net income. B26, monthly net income available for savings, right? So your net income minus your monthly expenses is what's available for savings. And then no surprise in the yearly column, multiplication by 12, and then here in the percentage column, division by the net income. So you know what percentage that is. A person may do a Roth contribution. And let's say this person is maxing it out. So 500 per month, and they're below 50. So then here is just multiplication by 12. So that would be 6,000 per month. That's the IRA contribution limit for a person below 50. And then here you're just doing division by the annual net income. All right, so then you have available for savings after Roth IRA contributions. So that's just B40 available for savings minus B42, the Roth contribution. And then nothing mysterious here. You have multiplication by 12. And then you have here division by the yearly net income, so that you know what percentage that is. So with these, false numbers, this person, would have 3.96% of their annual net income in order to do additional savings. And then maybe a person has an annual variable bonus. Not everyone has this, but sometimes companies, will have something. And, it's variable. So how do you estimate it? Well, you do your best. I don't estimate mine correctly ever, and I don't try because it would be a waste of my time because, it just gets announced. There's no information that I have access to or I can even begin to imagine what it's going to be. So if I was really gonna try hard, then I guess I would look at the last 5 years and average it out. But I'm not that interested in it, so I just kind of ballpark it and I don't plan around it. You can see that it's at the bottom of the budget. It's not funding the expenses. It's not being lived on. It's not being relied on. it just ends up at the end as additional money that could be used for saving. And so however much it is, that's what it's used for. So here, let's say that maybe a person receives $2,000 in annual variable bonus. So then, oh, whoops, I think, oh, wrong field, not monthly, right, not 2000 monthly, 2000 annual. There we go. That's working correctly. Yeah. Okay. So then nothing is going on in this cell. And this is just for the annual, for the yearly column, just entering in a really big ballpark number for what the bonus should be. And I would recommend don't aim towards the top, aim pretty firmly towards the middle. It's never what a person would actually want if they get a bonus, but aim at the middle. So then here, the amount possibly available, I say possibly because of the variable bonus. You just never know. It's simple addition. It's just C44 plus C46. So that's the available savings after the Roth IRA contribution plus whatever this variable bonus is. So here you arrive at this number, the amount that might possibly be available. And then nothing serious here again. It's just division by the net income, so you know a percent. That's not exactly the right calculation, but because technically the bonus, ends up being taxed, and then this is really the net number. So this number should probably be added to the other net income number, but I'm not going to get that deep into it since it's really, it's a fairly unknowable number. So I'm not going to stress myself out too much about that. And then this is the bottom of the budget, and so you end up knowing, I end up knowing exactly how much after taking care of all of the retirement funding and living expenses and everything, that exists, how much is available for additional savings, which could be putting into a safety cushion fund, a the 3 to 6 months of living expenses, that's good to have on hand, or also putting into a taxable investment account to begin building that. So it's just additional money that can be used to fund other goals besides retirement or financial independence goals. And then you just end up knowing, taking a rough swipe at what the bonus value might be, how much money could be available to fund those other goals. All right, so that is it. That is how I construct my budget. And, I hope that this was enlightening, for anyone, and that maybe you might see that it's not exactly daunting to create a budget. It is largely composed of numbers that are just lying around waiting for us to use them. And maybe this is a way of organizing that information that, having seen it, makes those numbers more approachable for you. All right. Well, I'm going to say please like and subscribe, and thanks for watching. Bye.